the opportunity to win a free 1-hour consultation from our speaker today. In order to participate, the student must sign in the attendance link that will be provided in the chat box in order to participate. I want to encourage everybody to be active in the presentation, asking questions through the chat box that will later be answered in the Q&A. I would also like to encourage everyone to turn on your cameras and turn off your microphones to make the presentation more engaging. The success of this workshop is your active participation. Now, with all that said, let me direct your attention to the lovely Miss Soledad Tanner, and let's give her a warm Palomino welcome. Thank you for coming, Miss Tanner. Your mic is off.
Hello, hello, everyone. So good to be back and so happy to be ready to speak in such an important topic as profitability. Give me just a second so we get to share the screen and make sure, hold on, make sure it looks good. Is it full screen, Itzel?
It's in the presenter screen.
Okay, hold on. Okay, let me go back. Just bear with me for a second until we do this. It's probably that's good, right? Tell me it's good.
Yes, now it
excellent. Excellent. Well, again, thank you for being for inviting me again. I want you to know that we have had a great speaker series. We have been educating and sharing feedback about key concepts and key practical tips and strategies. So if you want to start your business, you're thinking to start your business, or you already have your business, then you are successful and profitable, and you have all the tools that you need to just achieve your dream. A little bit about me. I am originally from Ecuador, so I am obviously fully bilingual. Puedes preguntarme en español o en inglés, so you can take advantage of that. I moved to this country as an immigrant 26 years ago to study my MBA. I got my Master in International Business from the University of St. Thomas. Worked 20 years for a global company in the area of finance, and 5.5 years ago decided to start and found STC Consulting, a financial management consulting firm, which help businesses be profitable and be successful. And one of the beauties of this is that I'm also a financial speaker, so I get to talk to you and share all that knowledge with you. This presentation has been created for you. So as I talk, I would like you to, and if you have a question, write down the question. So at the very end of the session, you can bombard me with all the questions that you have. So you we'll make sure we answer most of them. The business STC Consulting, we offer 6 services: CFO on demand, controller on demand, and financial speaking, as well as financial management, financial coaching and training, and business consulting. So let's start with the very beginning. The first concept that I want you to know. I want you to know that in order for you to know if you are profitable or not, you need to start with step number 1. Bookkeeping or record keeping, because without bookkeeping you don't know your numbers. So what are you going to read? What are you going to measure? So in any business, no matter how small the business is, you need to have a form of recording your transactions, recording your revenue, recording your costs, so you can go back and analyze your expenses. So what is record keeping? It's important. It's the process of recording transactions and events in an accounting system. So every time there's an invoice, it's recorded. Every time there's an expense, it's recorded. So recorded meaning it's set up, it's in the system. So when you go back and said, how much have I sold, then this transaction is already there. So why is record keeping? A lot of people bypass this step because like, no, I have the numbers in my head. Well, let me tell you, maybe you have one or two or three or four, but you cannot have 1,000, 2,000, 3,000 records in your head. So it keeps your business finances organized. That way that in any time you can run a report in different ways and the system will provide it to you. Do not spend hours and hours and hours trying to create and recreate reports because you want to see the data in one particular way or another. So again, it helps you generate reports automatically. Let me tell you now, during last year, when the government was giving money for the PPPs, many of the small businesses had to start from scratch, trying to see if they could provide the reports that the Small Business Administration was asking so people can access these credits. So I don't want you to find yourself if in a position that a bank or a government institution is asking for a report and you're just about to start pulling together. Use a software and use a system to record all the transactions of your business. One of the reasons why record keeping is key is that for any reason you want to know that you are doing having a positive or a negative trend, you want to detect that on time. Let me rephrase that. Let's say last month was wonderful. You sold 100 units of a product. Let's say you're selling T-shirts, and then you're making profit, and your product is selling. So you saw near the end of the month, you notice that you make money. Well, if that is going well, you want to repeat that positive trend. So you want to see what the results were, and then immediately you want to continue to do more of the same. But let's say last month was not good. You were selling a product that is costing too much. You cannot sell it at a good price. So you want to stop that as quick as you can so you don't dig yourself in a hole that is harder to get out. And obviously, a very important topic is that once you have your bookkeeping and your numbers organized and on time, you can pay your taxes on time. I know it doesn't sound exciting, but the worst thing is that I see many people that call me 2 days from the deadline, trying to figure out if they can have a year of accounting done in 2 hours. And that is just not possible. And people put themselves in really not a good position. So it's better to do it little by little, day by day, or week by week. Let's see, okay, hold on. Oh, right there. So I want to give you 8 tips to help you with bookkeeping. First of all, if you start a business, I want you to have different bank accounts. I need you to have a bank account for your home, for your personal expenses. Let's say the accounts that you go and pay for your books and you pay for going out with your friends, etc. That's in one account. And in another account, it's for your business. Do not mix transactions in the same account, because what you're doing is you're putting more work into you. There's a moment that you're going to have to say, okay, how much is the business? And then you're going to have to go transaction by transaction, trying to figure out what's this personal, what's this business, and why would you like to do that? And let me tell you something, after like a week, we don't remember. So if you separate and record your transactions in 2 different bank accounts, then you're much better in a position to know what is your business profit and what is your personal expenses. Number 2, and this is a big issue, avoid using cash. So this is what, because if you use cash, what is the proof that you pay something? Let's say you buy a new truck or maybe a new compressor for your business, and you pay, and it's $500, and you go to the bank, pull money out, and then you go and pay cash. Well, what kind of evidence I have that you pay for that? First of all, the other person can tell them, well, you never pay me. And second, when it's time to prove, like now for the PPP or the government support, that you will use the money that they gave us to buy that asset, there's no way to prove it. Many people pay their rent cash. Well, how are you going to prove to me that you pay it? So it's a good faith system that we need to stop, because then I cannot go to the government and say, yes, Soledad did pay the rent, but I have no receipt and no proof. I have no copies of checks. I have nothing. The other thing, suggestion number 3 is don't let these transactions accumulate. After a year, you separate that wonderful weekend, and then in that weekend, you're going to do all accounting. Well, it doesn't work that way, because now you are October, November. Do you think you will remember the expenses that you incurred in January? When you go and check at the receipt and it says $100 for capital services, you're not going to remember what it was. You're going to go back to the calendar and see more time invested in trying to figure out maybe what kind of services you paid. So try to do it every week. Then it will be small pieces and it's easier for you to do it. And subscribe to an accounting software. There's so many, and in the next slide, I will show you the most popular in 2021, so you get to choose the one that you like. Obviously, suggestion number 5, pay your tax obligations. I have had many clients that start their businesses, and then they come and tell me, I haven't paid taxes in 3 years. And I'm scared. Of course, you're going to be scared, because now you have a big payment to make. And it's better that if you're doing it in small pieces, year by year, as everybody else, so you don't find yourself with bad news and suddenly you just need to pay this huge amount of money to the government. Number 6, keep a complete records of accounting documents. What do I mean with this? Let's say you buy a car. When you go and buy a car, they give you a contract. You have the documents. When you go and buy office supplies, the store gives you a receipt. You can take a picture of that receipt, and that receipt can go into the accounting software. So those receipts are for a purpose. I don't, on a personal level, if you go and buy a hamburger and like a fast food, you don't need the receipt. Some people keep it, some people don't keep it. But for business, it is a requirement that business owners keep the receipts and upload them in their accounting system as a way for you to prove that you incurred that expense. If you don't know accounting, if you don't want to be a bookkeeper, please invest in an experienced bookkeeper. Many people would like to be bookkeepers. Many people think that they can learn bookkeeping with a video from YouTube, but obviously it will be that simple. People would not go to school and get certified. So make sure that when you hire somebody for your business, they have some experience and they understand the very basic principles of accounting. And also having a bookkeeping system allows you to determine what reports you need to see and what's the frequency. Then you can say, you know what, every month I would love to see these reports, and that helps me making sure my business is making profit, right? As promised, I went into research what are the top softwares in 2021 for small businesses, and I'm giving you here the top 10 softwares that small businesses use, and they're ranked in descending order. I obviously don't sponsor any of them. It's just public information that you can find in Google. Basically, most of the businesses that I deal with, they use Intuit QuickBooks, but there are many others that can be used. So imagine that you get in your car and you're going to go to your friend's house and you cover your eyes. How are you going to drive? So how are you going to make sure you are in the center of the street? How are going to make sure that you turn right or left when it's time? How are you going to read your GPS? Well, you can hear, right? But I would be very scared if I would not see where the street is. It's exactly what I'm trying to say here. The analogy that I'm trying to make is the same in your business. If you don't have reports or an accounting system or record keeping that is updated, it's like you are driving with your eyes blindfolded. And I don't wish that stress into anyone. So in order for you to remove the fault and see, you need to have analogies in accounting, in businesses. You need to have a system that tells you information, and based on that information, you make decisions, okay? So imagine the analogy will be like the GPS. The GPS tells you there's an accident or you turn right, then the reports and the accounting will tell you, you know what, this is not looking good, go this way, go that way, okay? So then let's talk about what financial statements or what statements you should ask your bookkeeper. Now you have a business, now you have your bookkeeper, now she or he is doing what they say they're doing. What did you ask them? What questions should you ask? What report should you ask? So number one is the profit and loss statement. So write that down. If after a month they are not giving you anything, you call them, hey, Miss and Mr. Bookkeeper, I need you to send me my profit and loss statement. Why? Because this report measures profitability, and we're all today is talking about profitability. What is profitability? It's revenue minus expenses. So the profit and loss is a summary of the company's revenues and expenses during a month, a quarter, or a year. So let's stop here for a second. What is revenues? Revenues is the total amount of money of what you have sold. So let's imagine for a moment that you have a coffee shop and that you sell coffee, and each cup of coffee is sold, it costs $1. If you sell 10, then your revenue will be $10. And let's assume that each cup of coffee costs you 25 cents. So the expenses is 25 cents times 10. And that is what this report, it's called the profit and loss statement, will show you. In the top part, and you can see it in darker, it says income. And the income has 3 categories under it. It's to make it simple right now, because we're not going to become profit and loss statement experts, but at least you need to know that the sales of the coffee will be in the first line where it says sales. We will have the $10 right there. And then let's imagine a very simple business that you only have one expense, which is the 25 cents. Then it will be below where it says expenses in the cost of goods sold. So your profit or loss will be at the bottom in the right. That is the simple way to read a profit and loss statement. Now, in real life, profit and loss statements are long and has many sub accounts, but don't get like shocked when you see it. Just start with the bigger numbers like total income, total expenses, total profit. And from there, then you see, oh, I sold 100, my expenses were 40, my profit was 60. And then if you want, you can go and figure out, how the expenses, if they were rent or people or telecommunication, et cetera, et cetera. But in this speaker call, talk, if you can leave this conference just knowing the 3 things that you can look at the profit and loss statement, and that you need to ask that to your bookkeeper and where to look. So income, expenses, and profit, we have done great. Why is that important? What are key questions that sometimes you're going to ask yourself? Well, natural questions. If you start a business, you want to know, how long will it take until I reach profit? Probably the first couple of months, you're going to be spending money in decorating, leasing a place, buying furniture, buying computers, buying this, buying that. But there is a point in your business that you need to stop expending and start, the sales should be higher than your expenses. That is the point that you're going to be making profit. And the second most important question for you is, when would you be able to pay yourself a salary? So let's stop here for a moment, because each one of us needs to have a salary so we can pay for our rent, our food, our communication, mobile, insurance, etc. So it's not many people say, oh, don't worry, it's free because I do it. Well, unless you have money sitting in a big, account that you don't need, you don't need to pay for your rent and your food and your gas, etc. We all need that. So it's important that you think, when will I be able to pay myself a salary? And one incorrect thing, not because you do it, it's free. Because you do it has a cost. The fact that you have experience, the fact that you are sitting there working and you are not in a different place, working in another job, has a cost. So the way I tell people is, if you will be working in another place and that place will pay you $15 an hour, let's just say as an example, right? The very minimum that you should assign yourself as work here is $15 an hour, the equivalent. Don't put yourself like $100 an hour, because obviously the business, it's new and doesn't have enough resources yet to pay for that. And assign a cost per hour, because your time there is valuable. And it may be that you cannot pay yourself the first, second, or third month, but you need to keep that expense into consideration. Because there was a point that you will say, okay, now pay me my salaries of the last 3 months. And if you don't consider that, then that cost will not be included, right? So make sure that you pay yourself. So what is profitability? Big, long, beautiful world. What is profitability? Profitability is the primary financial goal of your business. There are many other goals, there are many other purposes. You can help the people, you can help, it's your passion, it's your purpose. But from a financial point of view, profitability is the primary goal of your business, which means that you should sell at an amount, you should have a cost that is lower than that, and you should have some money left. So let's go. So profitability is a measure of efficiency for your business. It tells you your business is successful or not, because if there's not enough money to pay for expenses, then something is wrong and your business will fail. Without profitability, the business will not survive. Imagine that. So imagine that let's go back to the cup of coffee. So imagine that you sell the cup of coffee for $10, but the coffee, the sugar, the water, etc., it costs you $15. So where are you gonna get the money to pay for that, right? Let's say you have a credit card, you put it in the credit card, but you eventually have to pay the credit card or the loan, or family and friends give you a loan to help you. You have to pay that back. So you have to carve that amount of money within the price of each one of the items. So you pay for the cost and there is money left. Profitability is measured with income and expenses. Let's go back again to the example of the cup of coffee. So the cup of coffee sell, let's say, for $10, all the cup of coffees, and then the cost, let's say, is $40. So profit is what is left after you subtract the expenses from the income. Again, the concept, what is income? Income is money generated from the activities of your business. And it's important when you're thinking of profitability, not only think of today's profitability, of this month profitability, because maybe October was a really good month, but what happened in September? What happened in August? What happened in January? So it is accumulates. So it's important to think about past profitability, present profitability, and future profitability. Think about that for a second. So maybe in the past, I was making some money, but I make some changes and now I'm making more money. So the future looks better. So think of the three elements: past, current, and future profitability. And also it's very important, and a question that I get all the time. Well, when am I going to be able to reinvest in the business? Well, the only way that you can, well, not the only way, one of the ways that you can reinvest in your business is that your business itself generate enough profit so you leave something with the business and you take some with you as you know, as your profit for working the business. So let's talk about key concepts. What is the difference between pricing and profitability? There are two completely different things, but so let's clarify the concept. Price is the amount of that a customer is willing to pay for a product or service. Let's stop here 1 second. So let's say, let's put shoes. Shoes, I love to give the, for pricing, I love to give an example for shoes. There are some tennis shoes that you can buy, I don't know, maybe you help me later, but let's say for $40. You can get basic tennis shoes for $50, let's just say. And I'm willing to pay $50 for the tennis shoes because I'm going to use to just, I don't know, walk around the block. But there are some tennis shoes that I have been told that they are cost like $150, $200 because they are fancy, they are famous, they are designed with some specific element, and you have to be clear if you're willing to pay the price of $50 for tennis shoes or $200 for the same commodity, and there are different values associated with different prices. So that is the price of a commodity. But profit is the difference between the price that you pay, the price that customer pays, and all the costs incurred. So let's stay with the tennis shoes for a moment. It could be if I'm producing the tennis shoes that I'm selling for $50, it could be that my cost of, you know, the fabric, the labor, etc., is $35. So my profit for those tennis shoes is only $15. And if I take the same example and I said, you know what, for these tennis shoes that are $200, maybe the cost is the same $35. So obviously the profit is incredibly different between one and the other. So profit and price are connected, but they're two completely different things. So here, I want, before I don't want you to get confused. There are some 3 key words that I would like you to know in this topic. Number 1 is revenue. What is revenue? It's the money that you generate for the sales of your product and services. Outside the financial world, we just call it sales. So if you sell the tennis shoes, one pair of tennis shoes for $50, then you sold $50. That becomes, it's a simplified version, but that becomes your revenue, right? And in the same example of the tennis shoes, we said that the cost of fabric, labor, etc., was $35. So expenses is the money spent on something necessary to run the business. Remember, in expenses, we have 2 types. We have, in the case of the tennis shoes, we have the fabric, etc., anything that is related to building the tennis shoes. But also you have things that are not related. For example, the electricity that is required in the factories to produce that. Those are called indirect expenses, also part of the overall expenses of producing. So imagine the insurance, the computer, the mobile number, you know, all the security, all the other expenses that a company has to pay in order to have a place where these tennis shoes are going to be fabricated, right? And net profit is the money left after all expenses are paid. So Again, let's go. The tennis shoes is 50. Expenses are 35. The net profit is the 15. In those 35, we can have direct and indirect expenses. Direct expenses are the fabric and things that are in the shoes, the rubber, and indirect are things that are necessary, the AC, internet, insurance, etc., etc., etc. So those are the two things. Now I am going to switch examples. So this is my favorite example. Let's say we have a coffee shop. And as you can tell by the picture, in this coffee shop, we only have two products, a cup of coffee or a cup of tea. Simple. This example applies to services, to products, to anything that you do, okay? So this is also not real numbers, just to make it simple. So let's say I asked my accountant and I said, give me the profit and loss that Soledad said in that call. I need to see the report. And this is the report that she or he shows you. This is a very simplified version, but anyway, this is to clarify the concept. So your bookkeeper sends you the profit and loss, and here it is. You made $150 you sold $150 of coffee and tea. It cost you $80 and your profit was $70. So simple, you take the $70 that you see there and you divide it by 150 and you get that your margin is 47%. Everybody happy? That looks like a very nice positive return. I go home, I'm happy. Are you happy? Well, I'm going to show you an example. You shouldn't, because you really don't know yet. Look at this. So profitability is important that we analyze the whole profitability of the business, but it's also important that you analyze the profitability by each one of your product or services. So let's go back to the example. So the bookkeeper gave me the report and told me the great news that I'm making $70 or $70,000. So it's just a fake number, right? And I'm making 47%. And I thought, oh, great, my business is doing fantastic. But then I said, you know what? Tell me how much is the coffee only making and how much is the tea only making? And this is the same that applied if you sell tennis shoes, you sell for kids or for adults, or you sell pipes or you sell any product. And normally the companies will have more than one product or services. So let's go to the coffee. In this case, coffee, we sold $100 of coffee and $50 of tea. So we sold a total of $150. But then the cost of the coffee was only $25 because we're buying coffee here from Texas. And it was, we had a promotion and we just took advantage of a low cost of the coffee. But look at what happened with the tea. Let's imagine that the tea came from India and it was stuck in the ocean for a month because there's a supply chain problem now with the COVID. And suddenly when we got the tea, it was 55. Obviously, this is a completely fake example, right? So the total of the cost, 55 plus 25 is 80. It looks like we're good, we're still, but not necessarily, because if you look at the coffee itself, the coffee made $75. But look at the tea. We sold 50, the cost was 55, so we had a negative profit. So that negative minus 5, if we put it inside the positive 75, it looks like 70. But when you break it in two pieces, you may just discover that if you stop selling tea, it's not convenient for you at this time to sell tea because you have a negative profitability. As you can tell, in your product tea, you have a minus 10%, while in your product coffee, you have a 75%. I know this is a very simple example, and I hope it's clear, but I wanted to make the point that when you have a company, you're more likely going to have more than one product, don't be satisfied only looking at the overall profitability of your company. I ask you to please break it down and analyze the profitability of each one of the products. Because like this example, every time you sell a cup of tea, you are losing $5. So you're better off not offering the tea. You will make more money not offering the tea. You will have less expenses. And at the end of the day, you will have more profit. If you will have not sold the tea in this example, you will have made a profit of 75%, $75 instead of 70. So the lesson here is always when you request the profitability and the reports, make sure that each one of your products or services can be analyzed independently. So let's talk now, how do we accelerate the journey of profit? So margin is a measure of profitability. So people say, what is the margin, right? The profit margin is a ratio of a company profit. So we saw it earlier. We take the profit, we divide it by the revenue, and we get a percentage. So what is the formula? It's the sales minus all expenses, and that result we divided by the revenue. As we saw in the example of the coffee coffee and tea, we're making 47%. The profit margin ratio compares profit to sales and tells you how well you're running your company. So I wish you, for all of you, a green happy face in this dashboard. That it helps you measure how good you are in your business. And remember, the results are always expressed in a percentage. In other words, if you sell 100 and your cost is 50 and your profit is 50, then your profit margin is 50%. So when you talk profit margin, you always do it as a percentage. So there are three basic margins for any business. This applies to any, even if you have a small coffee and tea or bakery or industrial or massive company. These are the same. There are three ratios: the gross profit ratio, the net profit ratio, and the operational profit ratio. This is the deepest. And I promise you, just this is the simplest. So I want you to understand where they are. So in this example of revenue, let's say we sold 100 and the cost of goods sold was 60. We made 40. So let's I'm switching the numbers here so you get the concept. So we sold $100 in coffee. It cost us $60. We have left 40. So the gross profit margin is 40%. This is important because when you're thinking how much money I'm making in my business, you need to know I'm making 2% or 40%. Maybe you're working like crazy day and night, and at the end of the day, I come to you and I say, hey, you're only making 2%. And you say, well, that's not good enough. And because it's too little, I thought I was making at least 10, 20%, right? So it's important that you understand the different levels of the gross profit. So the different level of the ratios and the margins. So in the cup of coffee, if you sold it for 100 and the cost was 60, you were left with 40. The gross profit margin was 40%. And then you pay rent, employees, office supplies for 30. Then your net profit was only 10. So that means that your net profit margin is only 10%. And if you want to express this in a different way, many people like this way is to say, for every $100 that you sell, you keep in your pocket $10. And you haven't paid taxes yet. So it's very, very clear. You need to know these numbers really well because you need to have enough so you can pay your taxes. And we're almost done, but I know some of you are going to tell me, well, what is a good profit margin for my business? How do I know I'm doing well? So this is as a rule of thumb, 5% is a low margin, 10% is a healthy margin, and 20% is a high margin. But this depends on the industry. A one-size-fits-all approach is not the best way to set up your business goals. So this is just a general statement. So, so remember, if your business has a 20% margin, it means that for every $100 you sell, you keep $20 in your pocket. That sounds better that from every $100 that you sell, you keep $5 in your pocket. So this is just something for you to think. And with this, I want to finish with this very colorful slide. I'm going to explain it to you. So in the last slide, I said, well, 5%, 10%, 20% is kind of like an average, right? This graph gives you the average margin per industry. So as you can see here, tobacco on the top left, it's like turquoise color. It's a 43%, right? So here and as you move to the right, other industries have a much smaller profit. So 14% for telecom in the middle, and 11% for entertainment, and so on and so forth. So I leave you, I leave you, all of you with this. So if you want to start your business, you look here at the industry. So you are comparing yourself with something that is fair. So if you are, for example, in the semiconductor industry, it says here that is 18%. Okay, so you know that if you are at 5%, you are below the industry average, and you should be looking at your expenses. What is that you're doing that the average company in your same industry is doing different to have more profit? I hope you find this useful, and I hope that I'm leaving you with some key concepts that are going to help you succeed in your business. Keep in mind that financial knowledge gives you freedom. So please know your numbers. Please go over this presentation, and I wish you success in your idea and in your business. Here's my contact information. And here you can also follow me in all social medias. I am very active in LinkedIn, obviously, which is a professional network, but also Instagram and the others. And that's all from me. Thank you so much. And I'm going to stop at this point so we can open the floor for questions and other activities. Thank you so much for the opportunity.
Thank you very much, Ms. Tanner. So if you have a question, you can turn on your mic and ask the question, or you can also put your questions in the chat box, and the Office of Student Life will read them for you to Ms. Tanner. So I would like to start the Q&A with my own question. Well, I myself, I guess it's not a business related question, but it's a financial question. So this is just examples. It's not my real paycheck, but I make like $500 por quincena. And then from there, I take 20% off in cash. And with that 20%, I do whatever I want. Like, I want to go to the movies. Let me check my wallet. Yes, I can afford it. Oh, can I buy this? Let me check my wallet. Yes, I can. So when you said not to use cash, I don't know. I guess in business, you shouldn't use cash, but I guess using it at home, it's okay. Well, that's just my opinion. I like to do that.
Yes. The comment I made, it was for business and not for personal. I really like your system itself because it sets you you're setting yourself for success. You're giving yourself boundaries. You're setting yourself in a limit. And we always have infinite desires, right? I need a pair of shoes, but I can buy 100 pair of shoes, right? So if it's within this 20% that is for, I can get, my hair done. I want to buy a new pair of jeans. I want to go with my friends to dinner, whatever. So the fact that you are pulling that out in cash and putting it in your wallet, and you have a visual and you touch it, is an extraordinary way to save and to prevent that you start buying things out of impulse, right? Because you see it and you develop a system. And I love that. And that I promise you, it's going to take you all the way through all your adult life and productive and it will help you not to get in debt, not to say, oh, now, you know what? I came for one pair of shoes, but you know what? Look at those, are beautiful. I put it in the credit card, but they are $200. Oh, but you know what? Those shoes great with this and that and that. Suddenly you went for $50 and you spent $500 in the mall during the weekend. And now all the savings of that month gone to, disappear. So my comment about using credit cards or debit card for businesses is that you have more than one person, and then people start going everywhere to buy supplies, etc. And so then you have no control over who is spending what and what kind of receipt you had. So that was the comment was for business. Mm-hmm. Next question. Go ahead. Take advantage.
Hello, Ms. Tanner. I have a question. When you mention like a business owner has to make his own check, like how does that work? Because I remember I used to work in the snack place and the owner was my boss, of course. And he always said, I have to make your guys' checks and I still have to make mine check. So they can't just get money from like their business. You know what I'm trying to say?
Okay, so I'm not sure of the question. I'm going to try to answer if I don't answer it again, okay? So what I'm saying is, I hear all the time that people, when they are the owners, they just go and said, oh, I'm going to do this, that, and that. I can do it because it's free. So imagine in your case, your boss being there and being at the register working, right? So that person deserves to have a check cut to him or her at the end of the month. Because if that person gets sick, someone has to do that job, right? And when that someone has to do the job, we're going to have to pay because nobody works for free. You can help your family, but let's say your boss gets sick and now he was covering the weekend shift. We're going to have to hire somebody to replace that. And when we do that, the cost is going to probably maybe too much that the business itself, it doesn't have enough profit to support that function. So that's one way to see it. And the other way to see it is nothing is free, because if you see your activity as an economic function, let's say I'm a receptionist of a business, I could be in another place making $15 an hour, let's just say, I don't know, and bringing home a check of $500 instead of being here and not producing any money. So when you see your activity, you need to measure the profit of these activities, and make sure that you are in the best, you're making the best decision of what activity. And if you don't include your cost, then you're under costing your service. If you said, oh, I only need to have 2 employees for X amount of money and I'm making that profit, well, it's not true. You are really kind of not putting all the information that you need in order to calculate the true profit. I hope that answered the question.
No, yes, it is.
Thank you.
Miss. So when we talk about like saving, let's just say you put away, you get 100 every month, you put away 20%, so like that's $20 for yourself, and then the rest you put into like a bank or something that you end up saving up. What do you recommend with that saved up money?
How do you build your saving fund? Is
Yeah.
that okay? So either business or personal. It really does not, well, let me tell you about it. It does matter what you make until one point, meaning when you're at the very beginning, sometimes at the very first job, right? It's, you start where you start. And sometimes the very first job doesn't cover all your expenses, but the second one will, let's just say. So you covered your gas, you covered your food, your clothing, etc. Once you have covered your basic expenses, then the rest, those are wants. You have the needs and the wants. So your needs is your house, your food, etc., etc. You cover that 100%. As soon as you cover your wants, when you start crossing the line to your needs, I recommend you start with a 3% savings. Like you put it in an emergency fund, 3%, the first one. And then if you see that you save a little, that there's some money left, you put 5%. And then you start, every time you get a raise, this is how I did it. I'm going to share my secret. Every time I got a raise, even if it was 10 cents, I increased 1% my savings. So let's say you're making $10 and now you're making $11 and you were saving 2%, now increase to 3%, and then 4%, 5%, 6%. That way you almost don't feel it. What I believe to be a good saving ratio, when after you have covered, there are different moments, you have student loans and you have books and you have things like that. When you are in a good organized way, you should be saving 25% of your salary until you get at least 6 months. If you lose your job and you have to go back to the minimum so you can cover your expenses, you cover all of that, at least you have 6 months of those savings. So if something happened, you don't go into a panic. You say, okay, I'm going to start looking for a new job, but I will be able to pay my house, I will be able to pay electricity, and I will be able to pay for food. I may not be able to pay for a new pair of jeans, but that's fine. I can wait for that when I find my new job. But that level of comfort is a privilege and a gift that you only get after you have had the determination, the persistency, and the organization to save month after month after month.
Thank you very much, Ms. Turner, for that answer. Now, y'all know what time it is? It's the time for the raffle. It's the time for the spin the wheel. So it's for that free 1-hour consultation that we're offering. It's time to do it. So now, before we do spin the wheel, the student must have signed in the attendance that was provided in the chat box, and you have to be present to receive the prize. So please turn on your cameras, and Ms. Barra, take it away. And our winner is Mariciela Natili Lopez. Are you here, Mariciela? Are you here, Mariciela? You have won our prize. Yes, she is here.
Yeah, she's here. She just answered yes.
Hello, Mariciela. So you have won the free 1-hour consultation with Miss Tanner. Congratulations. So Ms. Vara will contact you separately for you to receive your prize. So thank you. Would you like to continue with the Q&A, ma'am?
Yes. If there are any questions, please take advantage.
Mm-hmm.
I have a question.
Yes.
How long will it take until I reach my profit?
What do you mean?
Like in a way, like for my income tax to reach its profit. You know how sometimes it's like too low and sometimes it's too much and some stuff like that.
Are you talking about a business profit
Yes.
Are you talking, so you have a business or you want to have a business? Okay. The quick answer to your question is you will reach profit when your revenue is higher than your expenses. So in the case of the cup of coffee, when your sales are 100 and your expenses are anything less than $99, then you reach profit. You have made $1 profit. That's when your expenses are higher than your income, you have losses. But I have the feeling that was not your question. You were asking, is that your question? Okay, that was Kara, right?
Yes.
Okay. Okay. So when you reach $1 profit, let's just say, then when you prepare your CPA prepares your income tax, she or he will say that your profit is 1, and that then based on that taxable income, I think it's a line 31 of the income tax, then the tax burden is calculated. The higher the profit, the higher the tax. But it's in a level by level way. But yes, once you have reached a certain level, then that's a different topic. Now, that is taxation, you know, how much tax you have to pay for that profit.
Yes, we do have a question in the chat. It says, what are some other techniques you use to be more responsible with your money? And I assume both business and personal.
Yes. Well, I think one, we address it in the second or third slide, is to know what to ask. I'm going to answer first from a business point of view, is to prepare yourself with the numbers and create budgets and forecasts. So to say, okay, I'm going to create this business. I'm gonna sell this product. How much do I think it's gonna cost? And having an idea of the costing and the numbers. And a lot of people tell me, well, I am not good with the numbers. I don't like to talk about it. If you don't get yourself involved with the numbers, who will? You tell me, who will? The neighbor? No, you have to be involved with the numbers, because even if you call yourself that you are bad with the numbers, you will become good, because that's why you are doing business. Because remember what we said, the purpose of the enterprise is to have profit. So being responsible is being connected with your numbers. Being responsible is having a budget. Being responsible is having a monthly meeting to analyze your results. Being responsible is asking for help when you reach to the topic and you said, nothing wrong. I said, I don't understand, right? Coming into a conference like this, why you're here? Because you want to learn, right? And I go to many other conferences, many other topics that I don't know. So being responsible is taking ownership of your behavior. So even if you are not that good, you little, but nobody's born, you know, you don't know a baby that walks and knows about numbers. It's all things that we have learned in our homes and the university. So be responsible with your money. You are the only one, you're the driver of your financial future, and don't give that power away to anyone. It is you and only you, and look for help in case, you know, you ask questions. I do all the time.
So, okay, Ms. Tanner, this is a question from me. You mentioned that you can be certified as a bookkeeper. I did not know that.
Yeah.
How do you certify yourself as a bookkeeper? And also, can you teach yourself to be a bookkeeper? Basically, what are the difference between teaching myself to be a bookkeeper and going to train myself to be a bookkeeper?
Bookkeeping is something that is taught in universities like the one you attend, right? It's a science. It's like being, I don't know, a baker or electrician. You know, everybody can train themselves to be a baker, but it's better if you have a teacher that tells you how to mix things. And learning is easier when you have somebody next to you who is a professional and explains you. You can obviously go to Google and you can obviously watch some videos, And the videos will tell you the surface, like the perfect example. But when you go there and you get stuck because it's not that simple, then you become short. So it's good. I want to encourage your desire to train yourself, which is great. But I also want to encourage to look for professional technical teaching. That's why we all went to universities, and that's why you're in the college. Because if we could all learn just watching a video, I don't want to get in that in an airplane with the captain of the plane has been trained through YouTube. I prefer to walk, right? So there are things that are good to learn. I can go and watch, pull a video to how to fly a plane, but I don't want to fly in that plane. So I want to be in an airplane where the captain has, I don't know how many hours, but I imagine 2,000 hours of training and certifications, and the same with bookkeeping. It's a science. Any other questions? Anybody has a business?
Yeah,
A business?
Sorry.
Go ahead.
I have another question. I don't know if this question is has to do with this particular presentation, but I do have a question about, like, let's say you have a business and you're the owner, of course, and so you have to make a separate income tax, like from the business and the owner.
Yes.
Oh, how does that work?
Okay. So let's say, have you heard about LLCs, companies that have LLC? Let's use that example for now. LLCs stand for Limited Liability Corporation. So the initials of those three words, which means it's a company that you have, if something goes wrong in the company, you have a limited liability. If somebody takes you to court, let's say you have a bakery and somebody gets, intoxicated with your bread, but terrible example probably, and there's a lawsuit and then you are found liable, you will only have to, you put the assets of your company instead of the personal one. So your house and other things that belong to you personally are protected, right? So when you have an LLC, you sell bread and you sold $100 on bread and the expenses were $50, you have $50 left, okay? So that means that the profit of the business is 50. And then that is what is called a pass-through revenue, which means that the profit of the business, it goes to the left and is inserted in your personal, if you're the owner, right? I'm talking about your one member of your LLC, you are the owner of your company. So that 50 is inserted into your personal income tax declaration. So let's say you have you work at a Laredo College part-time. So you will get a W-2 from Laredo College because you are a student, you are an employee. And in addition to that, you have these other, on the weekend, you have your business. So you will have the W-2 in your personal, and it will come across and it will be added, the profit that you do, that you make in your business. And then these two profits will be added, and then you pay taxes based on the total of the two.
So a question that I got from your presentation, you said that the taxes can increase if you don't pay them. Like, oh, I don't pay taxes this year, I get to pay them next year and it's going to increase. Is
Okay.
there like, is there a cheat sheet where I can pay less taxes and maybe not pay them as often?
Okay.
Or is it harder?
Okay, I'm gonna answer your question in two parts. Every week I get asked this question: what can I do so I pay less taxes? Imagine if I will have the secret sauce, I will be a millionaire, right? No, the best way to pay what is right for you is to have an organized system for your business. Is to start with record keeping or bookkeeping, have all of that so you can see your revenue, you can see your costs, you can have a strategic approach to it. It's the best way to pay what is right And don't forget any expenses. Go back to the 8 tips that I gave you. Don't for the business. Use debit or credit cards so all transactions are registered. Have monthly meetings. Have bookkeeping. All of that. That way, everything is organized and you have the true picture. That's the best way to decrease your tax obligation. What I said is I see people that come to my office and said, help me. I haven't paid taxes in 7 years. I'm telling you, it's like I am hyperventilating when I hear that, because what happened is, let's say 3 years. Okay, so the person A didn't pay 3 years ago, didn't pay 2 years ago, didn't pay last year. And now they have to pay for the 3 years. So what do you think is going to happen? What the person owed in year 1, plus what the person owed in year 2, plus the person owed in year 3, it's going to be a lot of money. And on top of that, if you do not pay it on time, you have to pay interest and penalties to the IRS. So not only you have to pay for what you didn't pay, but you have to pay more money, and now you have to pay it all at once. And if it gets bad, the IRS can come and even took the money directly from your paycheck. So do not get behind on income tax on taxes, please.
I've heard of this tip of myself. This is just like a passing voice. I heard that there's actually that you can actually go to the government and ask how much you owe, or is that not possible? I just heard that.
Who can ask?
That you can go to like a government office or something, and you can ask like, hey, how much do I actually owe in taxes? This is my name, this is my business and such. And they will help you in the government. Is it true?
So let's say you if you owe money and you are approaching the IRS and you're saying, I owe you money. I owe you money and I need to pay you, help me with a payment plan. That's possible. Yes. The IRS, if you just miss one and you come with a reasonable payment plan, then they will say, okay, good. But if you owe multiple years or you are audited because you couldn't prove the expenses, they come and sometimes they tell you, I'm sorry, you owe me $100,000, you pay me 75 now, and then the rest, and you have to figure out how, don't get yourself in that position, it's terrible. You have to, people go and make a loan so they can pay the IRS, and it's not a good place to be. It's better to little by little, in an organized way, pay what is due and have a happy life.
Miss Tanner.
Yes, Jonathan.
Besides having that like habit of saving up, what are other ways you could get more profit from a business?
Great question. I love that question. Many ways. So because it's not only about, let's start with the pricing. Make sure that your pricing is right. One of the mistakes that people make is that they start with prices that are too low. Because people tell me, well, I'm new, I don't know, I'm trying to get experience. That's correct in a way. But make sure that you're always checking your competition. And if the baker in the other corner is selling the bread for $2 and you're selling for 20 cents, what are you doing to yourself, right? So pricing is key. Always look what the competition is doing and always listen for your clients, what they are saying. Oh, it's too expensive, right? Like how can you sell a bread for $5? Like my neighbor sell it for $1.50. So listen to your clients, put the right pricing. It's also important to always deliver value to your clients, right? So imagine convenience. People pay for convenience and value. So for example, a good service for me is that I take my car to the drive-through so it can get washed every so often. Because before I would say, well, I do it on the weekend, but the weekend comes and I'm so tired, I don't do it. So now I'm being an offer, have an offer that I can offer that I can use that service. So think of every time you sell something, don't just fall in love with the commodity. You said, oh, I love my t-shirts, they're pretty. Think of what you're selling from the value point of view of the person. Who is going to buy this? Why they're going to buy this? Why is your t-shirt different than your neighbor t-shirt? And the other thing that I suggest that we can speak about this for days is have an organized company. Make sure everybody knows what they need to do in your company. So here you go and hire 5 people and you're paying every second that they are in your office. They're costing you money. And here you haven't told them what they have to do. You haven't given them targets. You haven't say, hey, Jonathan, I want you to, let's just say we're baking. I want you to bake 100 breads a day. Or let's say you're in customer service. I want you to reach 100 customers a day. And so if you don't give the manpower that you have instructions how to do it, and targets where you want them to get, you're wasting money. And when you're wasting money, you're increasing your expenses and you're decreasing your profit. So you are shooting yourself in the foot because you're eating all the money that could be in your pocket.
There's a question in the chat and it's asked, what are your thoughts when it comes to cryptocurrency investing?
Okay, so this chat was more about profit, so not so much about investing. I'm gonna give you a personal opinion. It makes me very nervous, even though a lot of people do it. I myself, Soledad, I prefer to create wealth through services and products, but that's a very personal answer. Everybody, I know many people in my group of friends and clients who are making money in cryptocurrencies. It makes me, I cannot sleep. It makes me very, very nervous. So, but I have low tolerance for risk. So that's also different in each person.
I get that. I have another question. This is personal. Say you have somehow had saved up, nothing bad has happened, you haven't lost a job, there was no accident, nothing. So in your savings, you've accumulated $1 million.
Wow.
So you would just leave it there until you need it, or what could you do with it?
So once you are the the methodical saver, now there's nothing related to luck here. It's really all related to discipline and work and strategy. So we're going to remove the word lucky if you win the lottery because it's a random thing, right? But here, when we talk about finances, discipline, what makes a difference, and control, not spending money. So let's say you are saving, and let's say you're, just for the sake of the example, your minimum expenses per month are $1,000, just say, and now you have $6,000 in your savings account for to cover your emergencies. But remember, those $6,000 are 6 months only of your very basic. So it doesn't even include your haircut, right? It's just oxygen and food, etc. So the next level is to say, okay, those $6,000 cover only my very, very basic expenses, but I also have expenses that are nice to have. Like I can go out with my friends to eat once a week. And I also, maybe I wax the car and I do I buy a shirt and jeans a month. So that will take me from $1,000 a month, let's say, to $2,000, let's just say, for the sake. So now your next target for saving is not 6,000, now it's 12,000. so once you cover not only so your basic expenses, but also your discretionary expenses. And I use this example. Let's say I'm not wishing this, but your mom, your dad, somebody gets sick, really, really sick, and you want to be in a position when you can say, you know what, I'm going to stop this for a moment and I'm going to go home and help my mom and my dad, and I will quit. And then I come, I want to have the peace of mind that I have the money there for an emergency. That's an emergency, right? And if after that you have that, I recommend that then the next level is you put the money maybe in a CD and a certificate of deposit, and you put it for a second purpose. Like I'm saving here for down payment of the house. I'm saving here for my vacation. Let's say you're doing so well with your company because you follow all Soledad advice on profit, and you're being so profitable, and now you have an account for emergency fund, you have an account, say, for the next vacation, you have already your down payment for the house, and you have already your down payment for your car is, etc. I recommend you going now into a 401k account, which is a retirement plan that your employer will provide. And after that, then if you maximize that 401k, then I recommend we sit with a financial advisor and we'll see what is the strategy that we put for the future to invest your money in other tools.
We don't seem to have any more questions. So thank you, Ms. Tanner, for coming here for us once again. And at this time, I would like to thank everyone who has joined us all through our 4-part speaker series on financial literacy with the wonderful Ms. Tanner. And thank you. It has been very insightful. It has very informative of everything you have said throughout the 4 presentations. So we really appreciate having you here.
Thank you. Thank you, all of you. And I want to wish all of you a wonderful Thanksgiving and stay healthy. And I hope to see you next year.
Me too, ma'am. So this concludes our virtual speaker series. I hope everyone has a wonderful day. Thank you so much for your attention. And thank you so much for your patience. And congratulations on the winner for the free 1-hour consultation. You get to see Ms. Tanner once again. So thank you. Have a wonderful day.
Bye-bye.
Bye, Tanner.
Bye.
Bye-bye.